Okay, so give me a brief rundown of version 4 as if I was buying a software at Trades R Us or something like that.
All right, imagine you're getting Quantum Shift V4 off the shelf. It's a short bias trading strategy built for NQ. It identifies setups when price fails below a key 5-minute level and enters near the Fibonacci retracement zone. You can choose how the trailing stop works, either classic swing high trailing or an EMA-based trade. Plus, it keeps you out of trades unless multiple time frames align under the EMA 9. You've got built-in risk controls, like a daily profit lot, and you can even get Telegram alerts when conditions change. Basically, it's a clear rule-driven tool that helps you ride momentum down while staying disciplined.
Give me the entry triggers.
Your entry triggers come in two
Order
steps.
submitted.
First, you identify a control candle on the 5-minute chart, basically a bullish candle. Then you wait for a following bearish candle that closes below that control candle's opening price. Once that happens, your entry area is calculated. You look for price to retrace up toward the 61.8% Fibonacci level. When price comes within a few points of that level, and your EMA conditions are met, the strategy triggers a short entry.
Okay, and tell me about the stop, the trailing stop.
Right after entry, your initial stop is placed above that 23.6% Fibonacci level, plus a small offset. Once the trade moves in your favor, reaching a certain profit threshold, the trailing stop kicks in. By default, it trails behind confirmed swing highs on the 1-minute chart. But if you enable the EMA trail option, it will trail behind the 1-minute EMA 9 line, offset by a few ticks, following price as it moves. So it's flexible. You can let swing structure or the EMA guide your trailing stop.
But it's basically set off of the 5-minute control candle failure and then a retrace to 61.8. Is that right?
Exactly right. The whole entry concept hinges on that 5-minute control candle pattern. Once you have a bullish control candle, followed by a bearish failure candle, you look for that retracement up to the 61.8% area. That's your golden zone for entry. And from there, the stops and trails follow the plan.
So right now I'm up 950 on my playback, which is cool. I have
Order submitted.
I have the EMA entry filter set at the 5-minute. It requires EMA 9 below the 5-minute. But if I were to change that to the 15-minute, what would be the requirement for entry?
If you switch to requiring the 15-minute EMA 9 filter, it means the strategy would only take short entries when the price is below the 15-minute EMA 9, not just the 5-minute. Essentially, you're adding a longer-term bias filter. So for a short setup, both the 15-minute and whatever other filters you set, like the 5-minute or 1-minute, would need to show price under their EMA 9 before the entry conditions are fully met. It's a way to ensure you're aligning with an even broader trend.
Okay.
Order submitted.
If you've got any more tweaks or want to explore different scenarios, feel free to ask. Otherwise, best of luck with your trading. You've got a solid framework going.
Explain the order handling properties and strategy properties.
Sure. Order handling properties control how the strategy manages entries in multiple orders. For instance, entries per direction sets how many trades in the same direction, long or short, can be open at once. Usually one for a simple strategy. Entry handling can be set to allow all entries or only unique signals. Stop and target handling determines whether stop losses and targets are managed per entry or per position. And exit on close ensures the strategy closes positions at the session's end if enabled. These give you control over how many trades are active and how orders are managed.
Explain the entry proximity points.
Entry proximity points are basically your trigger zone. Instead of waiting for price to hit the exact 61.8% retracement level, or another key level, you define a range around it. If price comes within that number of points from your entry target, the strategy will enter. It gives you a bit of flexibility so you don't miss a trade by just a tick or two. The smaller the number, the more precise you'll be. The larger the number, the more forgiving your entry zone becomes.
Okay.
Order stop filled.
No worries. To summarize what I was saying earlier, entry proximity points give you a buffer zone around your ideal entry level. Instead of needing the price to hit the exact target, you can say, if price comes within X points of that level, enter. It makes the strategy a bit more flexible and ensures you don't miss trades due to tiny price differences.
This is crazy. I think I've had 4 trades and I'm up $2,260, which is why I built this motherfucker, so I don't mess myself up. I don't want to change too much.
That's a great feeling. When you see a plan working, the temptation to tinker can actually be counterproductive. What I'd say is keep collecting data. Once you've got a large sample, then you'll know whether adjustments are truly needed. If it's doing well in different conditions, you might have found a sweet spot. For now, let it run and trust the logic you built. After all, that's why you put it together in the first place.